Ladies and gentlemen, today I come to you with an announcement. It's a very serious announcement. I'm going to show you probably the worst news for crypto in 2022. I know yesterday we got news that the US economy has contracted by negative 1% and that we're halfway into a recession, but this is way worse than this. There has been some big news in crypto, and I think it might be the worst news for crypto in 2022. And specifically, it's very, very bad news for Ethereum. You're not going to want to miss this.
Now, this just is like, we're talking money, so it's okay to say, hey, listen, made money. But I think Ethereum is terrific. I'm a believer, and I think that you could easily get 35, 40%.
Yeah, it's true. It is true. Jim Cramer has said that Ethereum is a good buy. And usually when Jim Cramer says something is a good buy, then if you invest in it, you can say goodbye to your money. It's true. I don't know why you guys are laughing. Why are you laughing? He called, listen, Jim Cramer called Netflix in January minus 66.8%, Roku minus 59.5%, PayPal. If Jim Cramer says it's a good buy, it's goodbye to your money. That's how it is. All righty. All right. Well, it's Friday, guys. Come on. Let's have some Friday fun. It's Friday. We're going to banter because, Fridays are all about banter. We've got a lot to talk about. We're going to be talking about the sideways range that Bitcoin is on at the moment. And why it can't break up. We almost saw a breakup yesterday. We didn't quite get the breakup. So we're going to be talking about that. We're also going to be talking about this, which I think is a big story. This over here. This is the other side metaverse. And they're doing their land sale this weekend. And that's been driving the Apecoin up, the Apecoin price up. And the question is whether Apecoin can sustain this pump after the weekend, or whether Apecoin will be going back down to zero. Also talking about ETH 2.0 and what it means. Lots of stuff talking about Luna. It's going to be a big show. It's a Friday show. We're going to have fun. We've got some great guests for you. We've got Alex Mashinsky with us. We've got Mike McGlone with us. And we've got a new guest coming on the show today. So let's have some fun. It's Friday. Alex, what's worse for crypto? Is it the fact that the US economy shrunk at a pace of 1%, negative 1% or 1.4%, or the fact that Jim Cramer told people to buy Ethereum and that it's going to give a 30 or 40% return? Which one is worse? No, we can't hear you, Alex. I think you need to unmute yourself.
Yeah, I'm saying neither one is good. We talked about it last year that, clouds are gathering and the Fed is probably overdoing. They're tightening too much. The market's already corrected. Obviously, prices already have moved. So it's all about now. The adjustment should be post-recession or post, inflation, and they're just now trying to catch up with the rest of the economy. So not a good situation.
Okay, that's a good answer. We're going to bring you on in a sec because we've got a lot to talk about. So there's a lot going to happen here today. As I said, we have had the worst news in crypto for the year. And as I said to you, it's not the worst news in crypto is not that the US is in a recession. It's also not that the Dixie is at 103.26. The Dixie it's on a mission. It's on a rampage. So it's also not that. The worst news of the year is definitely by far the Jim Cramer news. The fact that Jim Cramer is now telling everybody that they should be buying Ethereum, that there's a 30 to 40% pump in Ethereum. That's always a bad indicator. So listen, welcome back to those guys who are subscribed to the channel. For those of you who are new, quickly subscribe to the channel. I want to get into the show as quickly as possible. The reason why I want to get into the show is because there is so much to discuss this week. After the US is, well, you could say technically halfway into recession. You got Bitcoin struggling to break 40,000. We had a 40,000 options closeout today, or we had options closeout today. The point of max pain for the options closeout was 40,000. We touched 40,000, but then after a rough earnings week on the NASDAQ, well, it wasn't that rough. It was just a lot of companies reporting. We had Apple shooting the lights out. We had Amazon underperforming. We had Google underperforming, or Alphabet underperforming. We had Facebook. Well, overperforming, but overperforming over very, very, very low expectations. So yeah, lots happening, lots to discuss today. I think the big question in everyone's mind is, how long is this boredom going to last? And when can we expect this market to recover? Because we are all dying of boredom, except Mike McGlone, because he knows the answer. Mike, hi. Hi, Mike.
Hello. I had to get off a call and take myself off mute. Hey, Ran.
How you doing?
Good.
Welcome back, buddy.
I love that bad news, because if that's the only bad news we have, that's great.
Well, you tell me, is that the only bad news that we've got? Because we have got the Jim Cramer news. I think this is bad news. I think a strong dollar is bad news. It feels like a strong dollar is bad news, unless you're holding dollars. We've got the US slipping into recession. Well, one quarter with negative growth. Is there any other bad news that I don't know about?
But a lot of that is, I'd say 1 in 10 stuff. It's closer to 1. The 10 that really matters for crypto right now is the macro, the ebbing tide. The Federal Reserve is going to just be jawboning until the stock market goes down. And one of the leading indicators of all the speculative excesses the last few years have been crypto. The thing is, their revolution is they're going to come out ahead. So let's look at some facts so far in this year. And I think what's happening is Bitcoin and some other cryptos, particularly Bitcoin, is transitioning from risk on to risk off. So on the year, the NASDAQ is close to 20% down. Bitcoin's down about 15%, but typically Bitcoin trades about 3 to 4 times the volatility in NASDAQ. So that's divergent strength. And what I'm sensing, I'm speaking to you from the Bahamas, I'm at Crypto Bahamas, is there's bids below in the macroeconomic of and institutions in crypto, Bitcoin, Ethereum, Solana, some of the big ones that really matter. And there's offers above in the stock market. But right now, the macro, all that matters for everything is that Fed, they will tighten until markets go down and stop the ability for people to buy stuff. And cryptos were a leading indicator of speculative excesses the last few years. So we're just taking a little bit of that out. And then I think what's going to happen, the dust is going to settle. And then Bitcoin, Ethereum, and some of the other ones, we're going to just take off.
Okay, you're giving me so much to speak about. But before we start, I do want to welcome a new guest to Crypto Banter. His name is Tarek Monsour. Tarek, welcome, my friend.
Hey, everyone. Thanks for having me.
Yeah, man. So I really want to talk about your protocol too at the end of the show, because I think your protocol is absolutely genius. I think the guys are absolutely genius. But I want to kick off the show with the macro discussion. I think we all know that the Fed is meeting next week on the 4th of May. They're meeting for their FOMC meeting. At the FOMC meeting, it's expected that they're going to raise interest rates by 0.5, 50 basis points. It's going to be the first time in 20 years that they're raising interest rates by 0.5 basis points. In fact, look at that. The probabilities are now 99.1% that they're going to increase by 50 basis points. So there's no more believer that they're going to do less than that. How significant is it that yesterday we heard that the US had negative GDP growth? In context of this decision that the Fed has to make next week. Tarek, maybe you want to kick it off.
Yeah, I'll kick it off. So, I think, our markets are actually slightly, since yesterday's print, our markets at Kalshi, so what you just looked at is Fed funds futures. Right now, we're pricing it at 89%. So it's still pretty certain. Largely speaking, it's still pretty certain. Look, the negative GDP print, I think it was interesting because, from a surprise perspective, there was definitely the shock factor. Right, the expectation was around 1%. We got hit by a negative 1.4%. That, generally speaking, has a little bit of a sort of seismic shock where everyone is like, "What's going on?" But at the same time, when you really look sort of at the numbers inside, the sales and the demand is still there. A lot of the hit really came from sort of inventory drawdowns, and that usually is not necessarily that much of a bearish signal. So in my opinion, I don't think these numbers are going to change the sort of core story of what the Fed is going to do much. I usually am a little bit more concerned from less so from a recession and GDP growth perspective, and more so from an inflation expectation perspective. So that's broadly speaking what I'm seeing ahead of next meeting.
Okay. So you tweeted yesterday, you said the GDP print expected 1%, actual 1.4%. Ladies and gentlemen, welcome to hell. What is the context of that?
Yeah, so I think, there's a little bit of indirectness here. I think the GDP print, to me was, the sort of lack of potential forecastability of what we're seeing right now. If you compare our ability to forecast economic indicators and our economists' ability to forecast them over the last 6 months, it has gone down significantly, and that is sort of the thing that worries me, because when you can set a target and hit it, you tend to have control over the economy. And right now what we're seeing is like sort of a little bit of a lack of control and lack of potential forward guidance all across the board. And so really it goes back to when I was stressed, when I looked at these numbers, I got really stressed about inflation, because we've been having sort of this inflation transitory, and then inflation is sort of like that is all Russia, Ukraine, and now it seems like the Fed, I mean, look, they're hiking 50 bips, they're doing 2 rate hikes next week. We at Kalshi actually have been arguing for they should be hiking 3 rate hikes, because right now as things are standing, they're going to be hitting 5 to 6% inflation this year, which is around 2.5 to 3x what their target is, which is 2%. And that is where things can get risky, because if inflation rips, I see a world where the Fed basically panics and they need to sort of get it under control, and they start hiking a lot more aggressively later in the cycle, right? Our view is like in the fall they've been sort of slacking off a bit, and they should have hiked a little bit earlier. Now they're sort of trying to sort of smooth it out and get it slowly and progressively more hawkish. There is a chance where they basically are in a situation where they have to do a very hardcore left turn, which is the thing that could really drive us into a recession. So
Alex, what do you think? Alex, what do you think? I mean, I guess we all know what the Fed's going to do next week. I think more important is what he's going to say afterwards, right?
The Fed is a little bit like Jim Cramer. It's like whatever they do, it's like the opposite. So let's do some math, right? So since 2008, the Fed injected over $10 trillion, both in basically lending money to the government, right, and taking additional debt on, and buying equities, and mostly bonds, but also equities in the markets, right? So if you look at GDP, you're talking about GDP. All the GDP we had since 2008 came because they printed all this money. So I really don't understand why everybody's surprised that when they pull back, when they basically say, hey, we're going to stop providing liquidity, and we're going to start pulling liquidity out of the market, and we're going to raise rates, that GDP goes negative, right? It's a risk off across the board, right?
I hear you, but the GDP went negative happened before they raised rates, and before the quantitative tightening only starts tomorrow. On the 1st.
Market, in my AMA, I do AMA every Friday like you. In my AMA 3 weeks ago, I said I sold all my stocks, right? Everything. Why? Because you don't go against the Fed. And since 2008, going against the Fed was not owning equities. And since basically December of 2021, right? When Jerome Powell told you exactly what he's going to do, he told you, right? The market already is pricing that in. Risk off is already priced into the market. So people are unwinding their positions. Anyone who's smart and doesn't want to get hit by this freight train got away from what the Fed is going to do. The Fed's basically saying, we don't care what happens to equities. We're going to ram this through. And we don't care if you lose 50% or 60% on your Netflix or on your Google or it doesn't matter. We're going to fight inflation. We're going to make sure that we get our goals achieved. And again, the problem is all of that is already priced into the market. So they're in the catch 22, where they're basically always, instead of skating to where the puck is going to be, they're chasing where the puck was yesterday,
So I think Jerome Powell was, I'm trying to find this video, and forgive me if it's not at the right place, but I just called it up.
On the table for the May meeting.
Minister Miliani, are you more worried about?
So I'm trying to play this part for you guys. I think it's somewhere around here, if my memory serves me correctly.
And I think if you look at, for example, if you look at the last tightening cycle, which was a 2-year string of 25 basis point hikes from 2004 to 2006, inflation was a little over 3%. So inflation is much higher now, and our policy rate is still more accommodative than it was then. So it is appropriate, in my view, to be moving a little more quickly. And I also think there's something in the idea of front end loading whatever accommodation one thinks is appropriate. So So that does
Close to a
point.
yes.
That points in
There
the
you go.
direction of 50 basis points being on the table.
So you're talking about front-end loading, which means that front-end loading means he's going to start now with a very aggressive stance, and then hopefully taper off later.
Well, he's clueless. Look, shutting down Russia. Russia is the 9th largest economy in the world. We just took GDP worldwide down by 5 or 6% just because we shut down the 9th largest economy in the world. All commerce, all transactions, overnight, cease and desist, right? So none of that is Jerome is not calculating any of that into his math. So that's like a 500 basis point increase overnight, right? So this is just lunacy, right? We're going to have a very hard landing here. We're going to have a hard recession, not just a soft recession.
Okay.
And a lot of it is because Jerome is just shoving it down our throat. You know, he's like, I don't care what happens around. I'm just going to, every quarter, every meeting, I'm going to shove down 50 basis point increase in rates. And I'm going to suck liquidity out of the market. Instead of providing liquidity, I'm going to start taking liquidity out of the market. You know, 60,
I want to get Mike's
100 billion.
I want to get Mike's view, but then I've got a question for you. Maybe you can start thinking about the question. Once I get Mike's view, I'm going to ask you, what do you think Jerome Powell should do? Because he's faced with rampant inflation. He's faced with a seriously overheated economy. You can't deny that. I mean, even though the numbers will tell you, barring Russia. So before you answer it, Mike, what do you think happens next week? What do you think Jerome Powell's guidance says next week? Because I think that's what the markets are waiting for right now.
So let's point out the facts of what's happened. Now, first of all, what's going to happen is the Fed will raise 50 basis points unless the stock market crashes in the next day or two. And they're going to just keep raising rates, as Alex pointed out, until the stock market and risk assets drop enough to reduce the ability of people to buy stuff. It's not that complicated. As Alex said, it's right now, if you're long stocks, if you're long some cryptos, you're fighting the Fed. That's what's changed. They are now selling calls. And the last few years, you had that put. I mean, basically for the last 30, 40 years. So this is going to happen, but inflation will drop really fast soon. I agree with what Alex said, but I think they're doing the prudent thing. They're only jawboning. Remember, inflation's showing signs of peaking. The stock market's down 10% on the year.
Mike, we're struggling to get you. Your internet signal is really bad. Is there a way you could log on and log off just to see if we can get a better connection? Because this connection is quite poor. And then if that fails, maybe we'll just, we'll come right back. Okay, Alex, I want to come back to you on that question and ask you, and then Tarek, I'm coming to you with the same question. What would you do if you were today in Jerome Powell's shoes? And what do I mean? You have rampant inflation. At the same time, you have a war in Russia and Ukraine, which has driven commodities prices through the roof, and commodities prices means in a month or two, that's going to filter into consumer inflation. What would you do today if you were Jerome Powell and you were balancing all these expectations? What would you do?
Well, I've been consistent in my messaging since COVID started, and really instead of the Fed injecting liquidity and saving all the zombie companies, the cruise companies and the airlines and everybody who needed a bailout, we should have invested in onshoring. What does it mean, onshoring? The pendulum swung over 30 years. We went max globalization, max offshoring, right? China, Vietnam. We took all of our manufacturing and shipped it everywhere else. And then overnight, we discovered that between the war and the COVID, that gosh, we can't even produce masks in this country. We can't have stuff to sanitize our hands, right? So the point is that now we're doing onshoring. Onshoring is GDP. What is onshoring? That's GDP. You can get 4 or 5% GDP if you just did that. Now we're doing onshoring with very aggressively with car manufacturing, with chip manufacturing, but every industry needs to onshore. And instead of enabling that, instead of basically the government and the Fed going hand in hand to enable real GDP instead of financial engineering, we're continuing this game where we're kicking the can down the road. And again, what would you
do if you were Powell today? You are Jerome Powell. We give you a little bit more gray hair. We give you some glasses.
So I'm saying on top of what the Biden administration did with a $1.8 trillion package for whatever, roads and bridges and things like that, I would do another $1 trillion package for onshoring, just focusing on providing onshoring. And look, the good news is that the dollar is stronger than ever, right? I mean, we talked about that over the last year, that all this stuff that's happening is good for the dollar. We are still the prettiest house in the really bad neighborhood. And when the risk is off, everybody goes to the strongest currency, which is the US dollar. So that extends the franchise of the United States as the reserve currency of the world. And let's make sure that we fix this country before we run out of time.
Okay, Tarek, if you were sitting in Jerome Powell's shoes today, or maybe the question is, if as an investor in stocks and crypto, what would you like Jerome Powell to do now with the decision that he's faced? What do you think is?
Yeah, totally. Thanks for the question. So I'll give two answers. I mean, I think I would say there's a separate answer from a kind of pure economic perspective, and then if I own stocks and what I want him to do, and I think there's two different interests here. I mean, I think the view here is, I think right now the Fed is playing catch up. Right. I mean, there's this concept of soft versus, a hard landing. A soft landing is when you sort of start tapering inflation from the bottom before you hit 2%, versus, what the situation we're in right now, which is when inflation overshoots and you need to sort of slowly ramp it down from above. Historically, that has been very difficult for the Fed to do. I don't recall of an instant in recent macroeconomic history where the Fed managed to sort of slowly taper inflation back down to 2%. Generally speaking, the Fed usually crashes the economy when they're doing that. It's just really difficult. You're kind of riding a plane that is half broken as you're trying to land it smoothly. And so right now they're playing catch up. They should have raised interest rates slowly and progressively earlier last fall. I am of that view. But they didn't. So today, what I think they should do, I think 50 basis points in the next hike is reasonable. I'm actually a little bit on the other side. I would advocate for 75. So Bullard last month has been advocating for 50 basis points for quite some time, actually. And now the Fed has played catch up. Now Bullard is actually advocating for 75 for May. So I don't see a 75 basis point out of the question in June. And that is probably what I would do. I mean, there's a bullet that needs to be bitten at some point. They need to bite the bullet, and I think now is the time. The more they let it go, the more we're going into potential risks of stagflation, which is which can get quite tough.
All right, Mike. How long do you think this down cycle is going to last? When do you think the Fed's going to be happy? And the reason why I ask that is because when I look at the NASDAQ graph, and I know that you and I are both watching this US Tech 100 graph, this chart is now 25% off the top. This chart is now 14% down in April. When does the Fed say, okay, that's enough pain?
It's not even near there yet. I think what you need is basically a 1/3 correction in the broad stock market, which means maybe about 40% in the NASDAQ, maybe go back to 10,000. The Fed is doing exactly what they should be doing, I think, right now. They might have missed the inflation, but now they're catching up, and they will be fine because we're way overdue for a recession. Alex pointed out what's happening in Russia means a virtual guaranteed collapse of the Russian economy, a virtual guaranteed recession in Europe, and we're way overdue in the US. And it's all going to be led by the stock market going down, and Bitcoin is a leading indicator for that, and cryptos are. You have to take away some of that. The tide has to go down. So the thing that I think Mr. Powell would be alleviated, happy with, is once that stock market drops a little bit, maybe a third, everything's done. I don't think, for instance, the way thing you have to look at is look at Fed fund futures a year from now priced for 3%. Right now, they're 25 basis points. So it's too low at the moment. He's catching up. And I don't think they're going to get to 3% because once the stock market drops and does what it did maybe in 2008, the tide ebbs, inflation goes away, and then we have to reset. The problem is it might be a long time to get through this period. But the key thing I'm looking for an indication of when Bitcoin will bottom is when that 13th Fed future, which is for April 2023, right now starts ticking back up, and it's going to happen at some point. And that to me is when Bitcoin and gold will bottom and we'll do better.
Okay, so Alex said never bet against the Fed. You also highlighted that betting against the Fed now means actually owning risk on assets. That's betting against the Fed. Are you saying right now that it's still a good time to exit your risk assets, and particularly your crypto?
So I don't give investment bite. My point is the stock market should go down. Cryptos will continue to go down, but at a lesser pace. I mean, what's like the main ones, the broad market, not some of the 18,000 other ones I can't keep track of. Yet they're already doing that. They're showing divergent strength on a volatility weighted basis, and I think they're going to come out ahead. So right now, my bias is crypto will continue to decline with the ebbing tide. The stock market's, as you point out, it's nowhere near to stop the Fed from selling calls and make it go lower, and that'll come, and then the whole thing will reset. So it's looking forward. My job is to predict where things are going to go. So as far as what people do with their assets, I think the stock market's got a lot more room to the downside.
Which means crypto's got a lot more room to the downside.
It does, but it's also it's been outperforming, and I think it'll continue to outperform. Like I'm at the conference in the Bahamas, and that's what I'm seeing here. Everything here is about institutions getting into space, about the revolution, about rebuilding this financial network, which means bids below in crypto, and then there's offers above in equities because, as Alec pointed out, he sold. And I think that's what you're going to see. Most of the rest of the astute people like him are selling rallies and buying 2-year notes for protection. And institutions are just they're early days of getting into crypto assets.
Alex, what would make you buy in again? What would make you buy in again? Is it a certain level? What would make Alex go risk on again and start buying crypto and stocks and stuff like that?
Well, I think there's pain for us for the rest of this year. I don't see good news. Again, it doesn't mean Bitcoin is not going to go up, right? We're waiting finally for those two to decouple, the stock market and Bitcoin. We haven't seen that. I think correlations are as high as they've ever been, right, since the beginning of the year. But when you zoom out, if you look at the last 10 years and you measure it in terms of Bitcoin, the stock market, the S&P and NASDAQ lost 99% of its value against Bitcoin in terms of Bitcoin, right? If Bitcoin is the denominator. So that's going to continue, right? So no one knows when the bottom is going to be, right? I mean, Jim Cramer knows, but the rest of us don't know. And we just need to average in, right? So my recipe is very simple, and it's not financial advice, but if you own Bitcoin and you can't sleep at night, that means you have too much Bitcoin. And if you own Bitcoin and you sleep like a baby, that means you don't have enough Bitcoin. So for each person, you gotta average in and out. And again, I'm sure if I was in the Bahamas right now, I would be buying Bitcoin because everybody's giddy up over there. Everybody thinks that everything is amazing. It's always warm and nice over there, but I'm here in New York, and the weather is not so good. So it's not as warm, I would say, right? So I'm not buying anything right now.
Tarek, what would make you start buying, or are you buying?
I mean, look, I'm just sort of like in hold position right now. It really depends on sort of like the guidance that Powell gives post his meeting. That's at least my view. I mean, if you're getting a very hawkish tone, probably risk off still. But if he's seeming sort of still around the same tone that he's been having around the fall, even till now, probably sort of buy a little bit more all across the board. And then probably a little bit more stable market conditions. I mean, right now it's been like a few weeks where it's really hard to know, and timing the bottom, it's just pretty much impossible. So I'm probably like in wait and see right now.
Do you think that Powell's going to take into account the fact that he may be the Fed chairman in a period where the US went into recession? Because there's something about your reputation when you were the Fed chairman in a period where you went into recession. Now, they define recession as 2 or more periods where you're getting negative GDP growth. You've had 1 period of negative GDP growth, which means in 3 months' time we're going to measure it again, and they're going to say, okay, you've had 2 periods of GDP growth. Officially, you're in a recession. Do you think Powell wants that stain next to his name? Mike, you're nodding. I'd love to hear the answer.
Yeah, it's done. He said this twice in his last 2 press conferences last year, which is why we've been saying don't fight the Fed for more than 6 months now. He said it twice. I'm more concerned about how the market views me 25 years from now. He does not want to go down as a person who created a massive bubble and inflation. He wants to be remembered more like Paul Volcker, who squashed inflation. It took a recession, and he also made that deal with President Biden, and he's supposed to restrict inflation. That means he has to reduce the ability for people to buy stuff. But guess what he's done so far? He's raised 25 basis points. That's it. He's jawboning. He is doing, I think, what we're going to look back on is with a person who, remember, what this guy did, profiles in courage. He did push back on Trump. So as much as people push back on Mr. Powell, he's, I think, doing the right thing. He's just jawboning right now. He's going to let the markets do it for him. And history will remember him, I think, as the person who did the right thing. It was a little bit late, but prevented this bubble from getting out of hand. So stock market will do it for him. We get for a little recession. We're way overdue. And I think what's going to happen is you're going to look back from this period from the futures. We will never have the type of fiscal monetary stimulus we did in 2021 again, because we know the limits of just throwing money at the system, what you get from inflation. So right now, this is a way overset reduction. I mean, this happened after 2008. And the big difference then was the Fed was started easing in 2007. So when things collapsed, they just started easing more. Right now, they're tightening. And that's why I look at what Alex says, and even what Tarek says. Just this is a thing we're supposed to just say. You sell rallies in the equity market. You just try not to lose money, and the thing all needs to reset lower. So I don't think he's worried about recession. In fact, that's typically what you need to reduce the kind of inflation we've had. But it's going to happen anyway. A year from now, we're going to be more worried about deflation, in my view.
I want to ask you two questions. The first question is, what do you think the bottom is for Bitcoin in the cycle? Because you're clearly telling me we're not at the bottom. You're clearly telling me we're not at the bottom and there's more pain. What do you think if you would? And I know you're a charts guy, which is why I don't mind asking you for price predictions. If you look at your charts and you do your fibs and you do whatever you guys do, the magic, the voodoo that you do on the charts, what would you say is going to be the low of Bitcoin in the cycle?
So I think 30,000 is significant support. And right now, I'm already sensing responsive buyers below the market. The speculators are selling. The responsive buying, hold tight or never sell, are buying. I don't think it gets much below 30,000. But I love to be called a charts guy because, Brian, I'm an everything guy. Charts are just the best way.
But you're also a very good charts guy. I've seen your
exactly. So that's a good way to depict fundamentals, and people think in terms of visuals. So a chart really helps. So bottom line, I think what's going to happen in Bitcoin, it holds pretty good support around 30. I don't think it gets to 20 and stock market drops 50%. Yeah, Bitcoin's going to suffer. And I think it's a matter of time that Bitcoin continues its long-term trajectory, which Alex pointed out, versus virtually all assets, and gets to $100,000.
Okay, great. Let's talk about this chart. Talk about this chart over here. This is the Dixie.
One more, if I can add just one more comment on Mike's. Look, in the stock market, there's a rotation. It's not that everybody's just selling and going into cash, right? So a lot of portfolios are effectively basically rotating from risk on to risk off, and they're buying, things that are recession-proof or as close to recession-proof as possible, right? Utilities and annuities and things like that, right? And some financials and so on. So that's one driver. In crypto, it's the opposite. Most institutions don't have enough exposure. So all the institutions that are just now opening desks and hiring people for crypto are just getting the exposure on. So as prices go down, they actually act as support. And that's why crypto is outperforming the NASDAQ and some of the other indexes, and will continue to outperform. So yes, I think 30 to 33,000 is that range that we all know has really strong support. And the reason for that is that institutions are, the lower it goes, the more these institutions are buying to get the exposure they're looking for.
I was going to ask you about Dixie. We'll go back to the Dixie. I want to ask you about the news this week that Fidelity came out and said that, they are the biggest 401k provider in the States. They manage about 1/3 of all the 401ks in the States. It is estimated there's over $8 trillion in 401ks today, which means that about $2.3 trillion or $2.5 trillion of that is sitting today with Fidelity. How big is the news that they have now integrated or allow people to buy Bitcoin on their 401ks? Because it sounded to me like it was one of the biggest news events of the year.
Yeah, it's great. Australia, Canada, US, everybody, every time a financial institutions open the floodgates to a product, an ETF or ETN or 401k and so on, that is new demand for an asset that has limited supply. So really, the big advantage that we have here is that crypto has this new supply demand, but the stock market doesn't, right? When Jerome scares them, they just start selling. There's no new demand. There's no Fidelity coming in and saying, okay, here's customers that never had access before. They're going to buy your Netflix shares or they're going to buy your Tesla shares.
Tarek, what do you think? I mean, was the news big, and just because we're in a bit of a bear cycle that the market didn't respond, or do you think it was just the headline?
It's really hard to know. I mean, I didn't feel like the impact. I mean, at least to me, my initial gut reaction was it might not be that sort of impactful or anything like that. It feels like one of those sort of marketing stunts that some of the older Web2 companies are doing in terms of the getting into Web3. I mean, look, Bitcoin is still sort of down 18% for the month, so it's really hard to know how much of that was sort of a support for it. And if it was, I mean, it's probably already priced in. So yeah, I don't see anything sort of meaningful
Mike, what do you think?
for the future.
Yeah, I have to echo both what Alex and Tarek said. It's Fidelity's been an absolute leader in this space. I mean, they're opened up an ETF, a Bitcoin ETF in Canada, and they're part of the reason it's going to happen in this country any moment. It's happening sooner now. And they've been a leader. They were a leader in equities years ago of getting in 401ks and stuff. So you don't want to fight that wave. And I think exactly what Alex and Tarek said is there is more, and people are not increasing allocations to equities. They're increasing the allocations to this new revolution asset. And that's what I see here in Bahamas. I sat next to a guy the other day. He's from a pension fund. I see government leaders here. Everybody's here to learn more in gaming space. And the key thing that Tony Blair said, when he spoke yesterday with Clinton and with Sam Bankman-Fried, was the biggest, most significant thing is ignorance. So the world is getting it. Fidelity's the leader. Kathy Wood is sending money to Canada, and the U.S. is just catching up. So here's the things we're going to look forward to. There's going to be a Bitcoin physical ETF. There's going to be an ETF that tracks a physical index. That's the bottom line for institutions. You don't want to just go buy Apple or Amazon, which is the problem right now. You saw what's happened to those two stocks, the darlings. You want to buy an index. And at some point, the SEC, Mr. Gensler is going to say, okay, if I'm protecting investors, I need to approve and need people to buy an index of cryptos, physically backed cryptos. That's going to happen to me. It's just a matter of time if our SEC is out to protect investors.
Is Bill Clinton in the Bahamas?
Yeah, well, there was that was the keynote panel yesterday. It was Bill Clinton, Tony Blair, and Sam Bankman-Fried. It was awesome.
Did he bring his wife or did he bring someone else?
Yeah, well, I don't know about who he brought, but these two world leaders, I mean, Alex and I certainly remember they were icons of the 90s, and they both get it. And it's so cool, the juxtaposition, to see these astute world leaders who are just like, hey, this space is happening. We're just doing everything we can learn. The most significant thing is ignorance. And Sam Bankman-Fried sitting there with basically, he dresses like I used to dress in the summer when I'm doing yard work. And the guy can never cut his hair because that's his look, but he
dresses like I used to dress in the summer when I'm doing yard work.
Oh, it's so true, man. A t-shirt and shorts. Like the first thing he said when he opened the conference, it was like 9 o'clock, is, man, you people get up early. It's just, he's so genuine. And he's the number two contributor to the Biden campaign. You see where that's going? The fact that they were on the same stage in this place is the world knows what's happening. For instance, FTX, they tokenizing assets. What stops that from happening? For instance, what are crypto dollars? What are stable coins? Our tokenized version of the dollar. And the number one traded crypto on the planet is Tether. Controversial, but it's the dollar. That's what Alex mentioned earlier, is that this space, people are finally getting, our leaders, that this is increasing dollar dominance. This is helping save the world from autocratic societies. And these people get it. And that's where investors are saying, okay, how can I get a piece of this? So sure, right now it's the crypto winter, it's the ebbing tide, but look forward a couple of years. That's the way we're supposed to look at the space.
You said it, so I'm going to talk about it, which is the ETF. There's a massive campaign by Grayscale to get the ETF approved. Australia's approved an ETF, which was supposed to be launched this week, didn't get launched. There were, I think, a big number of fund managers. I think it was about 70% of fund managers in a survey, my number may be wrong, but said that they would invest a whole lot of money into crypto if there was an ETF. And then you've got Gary Gensler sitting there and going, no ETF for you guys, coming up with a whole lot of different reasons. Recently, we had a futures ETF, which was approved under, I think it was Rule 30, which is the same rule that Grayscale have applied for their ETF. When is this ETF going to come? What's the problem? Where, when, why is Gary Gensler putting on the brakes? What's going on?
The good news is he's one person increasingly isolated, and I think it's coming down to, do you want to be remembered in history as Aaron Burr or Alexander Hamilton? And he's getting that slowly because the money is just flowing. The pressure is overwhelming. So I talked to Michael Sullenstein recently with Grayscale, and they're going to be an ETF. It's just a matter of time. If it doesn't happen, it's leaving the country. And that's what's happening. funds are leaving the country. But here's the thing that's happening is there's so much money, so many votes, and so many jobs. You know how things work in this country. It's going to happen. And he's increasingly isolated. He's only got about 2 years left in his term, and we just get rid of him. So it might take that long. But here's a key little fact. SEC just approved a 33 Act ETF for Kucoin. That's just a baby step to get to the big picture. Before he said 40 Act is okay, it's better for investor protections, but he's caving slowly, partly because the pressure is overwhelming and it's increasing every day. And it's one thing I hear from here, people say it's because the people want it.
Tarek, is the ETF coming this year?
So you have a barometer or thermometer, whatever you want to call it, for the ETF. It's GBTC. GBTC is trading at a 24% discount, and the discount tells you how much does Wall Street believe that it's coming soon. Because if I'm a hedge fund and I believe that it's coming soon, I'm just going to buy GBTC and capture that delta the minute that it's approved. So the fact that it's trading close to, the discount is close to all-time highs, tells you it's not anytime soon, at least not for Grayscale, right? So I think there are many reasons why the SEC and others, it's not just the SEC, right? In Europe, you also have problems. You only have ETNs, I think, right now. And it's because there's so much manipulation of the price of Bitcoin on so many exchanges. Most people don't understand this, but basically, Apple or Tesla have one book, right? Basically, all the buys, all the bids, all the
traded on one exchange. Traded on one exchange, so to speak.
Traded on one exchange. The price of Bitcoin is actually determined on over 500 exchanges. Now, again, Binance is the largest, but the price is different at any second on 500 different markets. And most of these markets are actually offshore. Most of the volume is offshore. And Gensler is saying, I'm not going to let my retail US users get manipulated by some offshore guy who, with the press of a button, can trade against.
Take the price on Coinbase. Take the price on Coinbase, Binance, and FTX, and use that as the oracle. I mean, come on.
I would love for it to be true, but the price on Coinbase is tied to the price of Bitcoin worldwide. It's not trading on some independent bid and ask book. So because of that, I think that there's caution with regulators. And some of it is justified. I mean, when you see Bitcoin crash 8% on the weekend, or it goes up 8% on the weekend with no news, that's exactly what all of us are raising our eyebrows for.
I mean,
what the heck is going on here?
Fair point, but you sound like the old school guys. Sorry, fair point, but you really sound like the real old school guys. I would love for an ETN. I own GBTC personally. I also own GBTC. Of course, I own GBT.
So it's not like I'm just telling you. You ask me why or when it's going to get approved, and I'm just telling you that the market is telling us right now it's not getting approved anytime soon.
I must tell you, I don't buy Bitcoin anymore. I don't actually buy physical Bitcoin anymore. I just buy GBTC. The reason is my investment horizon is long term. Like when I buy Bitcoin, I'm buying them for 5 or 10 years down. And I know for sure that within 5 to 10 years, GBTC will be converted into either an ETF or it will liquidate itself and pay out the Bitcoin. They will not leave it trading at a 25% discount. So for me, instead of buying Bitcoin, because I have such a long time horizon, I just buy GBTC. Now, I know you know
who else? You know who else is buying GBTC? Barry Silbert, right? So the owner of Grayscale, I think they allocated something like close to $1 billion, right? So they're basically saying, look, we know this thing is Barry's doing the same thing we're doing. It's just he's not paying the 2% fee that we're paying him because he's paying to himself. So if you wait 5 years, that's 10% that you shaved off that discount, right? So there is a cost to owning GBTC. It's not like it's free. When you own Bitcoin, you don't have the cost of the underlying.
I mean, I pay my custodians point something per year, right? I mean, and I pay.
Well, Celsius pays you to hold assets for free, and it's safer than anything else out there. So it's a shame that you're paying custodians to hold your Bitcoin.
Good point. Tarek, let's hear your views on the ETF and our friend Gary.
Yeah, I mean, I totally agree with both. I mean, I think, look, regulator timing, we're regulated by the CFTC. It took us 3 years to get regulated. So, regulator timing is a mystery. You can never precisely predict it. And they work in mysterious ways and they have concerns and there's a few different things. I do think there's a bullish case right now. I mean, you've probably seen the crypto bill proposed by Gillibrand and Wyden. I mean, those types of things are the types of things that a chairman of agencies like the CFC and SEC usually look at for political air coverage. Because when you think about the regulator mindset, what they're thinking about is like, what is the downside risk? That's what they're usually focused on. You know, what is my downside risk? You know, we are the business, we're industry, we are the people that are sort of going to have the upside and make money out of, you know, innovation. But regulators are usually thinking only about the downside. And usually the best way to minimize downside is political air coverage. And it seems like the tide is turning with Congress right now, you know, towards sort of more openness towards crypto. And that I think I see as a very bold case for a potential ETF, you know, end of this year. It might be aggressive, but you know, I don't put that out of the question.
Is the election, the midterm election, is that maybe a factor, or is that a non-event?
Look, I think it is a factor, but I think it's bipartisan. I mean, at least what we're seeing right now from Congress, it is from both sides of the aisle. There's broad support. I mean, look, there's always obviously skeptics, but there's really broad support. It is not one of those issues that you feel like is really debated with heat in the House and Senate. You know, everyone is sort of seeing that this is a pretty big innovation coming. And, you know, the bill that was proposed by Gillibrand and Loomis, so Gillibrand is a Democrat and Loomis is, so Gillibrand, Democrat, Wyden is a Democrat, and Loomis is a Republican. So it is a bipartisan bill. And I think that's a positive signal. I don't think there's very strong dependence. We are running out of time. I quickly want to talk to you guys about this Dixie chart because, you know, last year everyone was a virus specialist. Then they all became vaccine specialists. Then they all became economists. Everyone became an economist, and they started talking about interest rates. Then they became geopolitical experts. Everyone started speaking about Russia and Ukraine and when the war will end. Now everyone is a Dixie expert. Okay, so now you're not allowed to be on Twitter unless you've done your master's in Dixie. So now you have the Dixie, the dollar index up at over 103, touched 104. It's the highest rate that it's been at in years and years and years. What is causing this, number one? What does this mean? Because the way that I read this, the stronger the dollar becomes, the harder it is for companies to generate earnings. The higher the harder it is for companies to generate earnings, the lower the earnings, the more the market continues to drop. That's how I read this chart.
That's the old days. The bottom line with the dollar, as Alex mentioned earlier, is it's like how Churchill described democracy. It's the worst form of government except for the others. And I love when people push back in the dollar. I'm like, show me a good alternative. On the scale 1 to 10, every other currency in the world might get to a 3 if they're lucky. I mean, it's just, there's no deeper market, deeper bond market, stronger military, better system than the good old buck. And that's been the case for 60 years. The thing is, in cryptos, when people push back and, it might be replaced by Bitcoin, what's the number one traded cryptos on the planet? They're digital dollars. Tether's just one of them. You click on coinmarketcap.com. I show this to all the students I present to and all the professionals, and I'm going to make sure I get in the terminals. Click on the volume. Tether's number one for a reason. That happened organically. Now our government's figuring it out. So the dollar is supreme. It's gaining supremacy. And what's happening with this war is just showing the limits of autocratic societies who cannot adjust to rapid lancing technology. And just the bottom line is cryptos have gone for the buck for transacting. And things like for buying and holding, like you mentioned, you buy GBTC and every day and don't think about it, that's where they want to invest. So this, it's not going to be replaced anytime soon. In fact, the fact is it's gaining dominance despite the fact that U.S. is becoming a lesser part of global GDP. And now this war, it's just a very simple fact. In the UN, virtually 80% of all the countries condemned it and voted against it. And people point out the 20%, who cares about that? China and Russia are I mean, what China did, pushing back in free market capitalism, banning cryptos, they're collapsing. Their GDP is declining. And guess what? I said this stuff years ago. And you just can't, when you have, and Bill Clinton even said it, when you have a leader who, both Putin and Xi, who don't allow discourse, who don't allow, and don't allow pushback from aides, they are doomed to failure. And that's what's happening in both countries right now. It's part of the reason this war is going, because Russia knows that they're not just keeping, and the U.S. is crushing it. Just think of, here's one simple thing I'll leave you with. Right now, the world's largest producer of energy and exporter of LNG, the U.S. The world's largest producer and exporter of grains, the U.S. That wasn't the case a few years ago. So the U.S. is crushing this by just not messing up the system.
Yep.
Okay. I mean, it sounds like you're very much a U.S. What's the word I'm looking for? proponent of the US dollar. Alex, what do you think?
Pax Americana, that's the name of the. Who has? Well, look, the dollar is definitely getting stronger. We talked about it for a while, right? I did several interviews saying all of this is going to result in a much stronger dollar. I think if you do an analogy of all of these fiat currencies to dominoes that are standing in a line, and their size is based on how much currency is actually issued out there. Obviously, the largest domino would be the US dollar, and you can see the dominoes falling. The Lebanese domino, the Turkish domino, Argentina, Venezuela, right? They're all falling.
You're saying, actually, if I understand, you're saying they're all shitcoins, but the US dollar is the best shitcoin.
Yeah, but it's important to understand when a domino like Turkey falls, when the currency collapses, the value migrates. It's not that the value is lost forever. A lot of value just migrates into other fiat currencies like the dollar. So the fact that the dollar is getting stronger, it's because the other ones are deflating, right? So people are running away from the houses that are on fire to the house that they hope is the safest house in the neighborhood. And the dollar, with all of our problems, look, again, people don't understand this, but if you taxed all Americans 100% of their wealth, you will not be able to pay the debt that the United States have, the 30 trillion in debt that the United States already have, right? So it's not that our house is perfect. It's also made out of, it's going to go on fire as well. It's just right now, all the other little houses are on fire, and the United States dollar, it looks like a mighty safe bet. But most of these people don't know that they can migrate into non-correlated assets like Bitcoin or Ethereum and so on. And when whoever builds that bridge, right, build the bridge between TradFi and CeFi, or CeFi and DeFi, which is what we're working on, whoever we're going to build a really wide bridge to allow all that money to come in. Obviously FTX is trying to build it, and Coinbase is trying to build it. And Celsius managed to accumulate 23 billion in assets because a lot of people realized staying in that US dollar house is even more dangerous than being in Turkish lira.
Yeah. Okay, guys, we are running out of time. I do want to give Tarek one. I'm fascinated by Tarek's. Tarek is the CEO of a app or a company called Kalshi. Kalshi allows you to bet pretty much on anything, right? Walk us through it, Tarek, just in the last 1 minute.
Yeah, absolutely. So we're the first CFTC regulated exchange that allows you to trade directly on events. So we're commoditizing or creating derivatives out of any thing in the world, whether it's COVID, economic indicators, recessions, Brexit happening, next elections, etc. Regulated by the CFTC. This has been blocked in the US for decades. So we're very familiar with sort of regulatory blocks. We spent 3 years convincing regulators to do it, and we actually cleared with FTX. That's our regulated clearinghouse. The product came out this fall, and so the idea is really having a bunch of markets that are directly tied to specific sort of economic factors or things that are like around and happening in the world, and that sort of gives a forecast around these things.
So I thought we appealed to degens. But when I look at your site, like, you really appeal to degens. You can take bets on like the gas price at the end of this week, student loan forgiveness. Can I create my own market here?
You can suggest markets. Obviously we take it to compliance and get it through regulatory approval. But yes.
So if I wanted to create a market, this is just an example. I would never think of creating a market, I guess. But like, who will Bill Clinton take to the next event? Will it be Hillary, or will it be someone who's 18? Could I create that market?
Solid hedging and economic utility for that, we can probably list it. So we're gonna have to think about the economic utility there.
And is this a crypto project, or is this a non-crypto project?
Look, I think it's a mix. We're kind of, I don't know. I haven't really thought about sort of the labels. Our clearinghouse is FTX. Obviously we clear with, I would assume, FTX is probably a crypto project, but the exchange side right now is we're focused on all sorts of world events. At some point we're going to be starting to list crypto. yeah, that's the idea. Our approval is very broad. We have one of the broadest approvals in history from the CFTC. Holy
shit! There's some very cool things here. There's unemployment spike, New York subway riders. You can bet on anything. Got something to do over the weekend. All right, guys. Thank you so much. Love you guys madly. It is time for us to say goodbye. Mike, enjoy the Bahamas. Send love to Tony Blair and to Sam Bankman-Fried and to Bill Clinton and to whoever he came with. Alex, it looks like you're in the Hamptons, so have fun at the Hamptons. Tarek, good to have you on Banter. I'll see you guys soon. Okay, now Banter fam, don't go yet, because we are at the fun part of the show. Since it is Friday, I do want to make some people's weekends. I want to make some people happy. How I'm going to make people happy is very simple. You know the drill. You know how it goes. You got to sign up on ByBit using our referral link below. Now, once you've signed up, we know how much money you've put in your account because we get a printout from ByBit every single day. We get a printout that says, look, these are the account numbers and this is the amount of money they got in here. What we're going to do now is we're going to pick, it's just random accounts. And so we're going to pick account number 180. Account number 180, we're going to 10x this account to a maximum of $10,000. We're not paying more than $10,000. Then we're going to 2x all these accounts. 1, 2, 3 accounts. So we've got 4 accounts here. We're going to 2x the other ones. We're going to 10x the other ones. Now, what you need to do is very simple. There's a ByBit link below. Sign up with ByBit. You don't have to trade. Just deposit money into your account. Once you deposit money into your account, you automatically participate. Now, what we're going to do is we're going to unhide the columns. It was column number 180. Remember, the maximum any person can win is $10,000. Where are we today? I always get the bubbles here because, let's see what's going to happen. Account number was 180, yeah? 180, $100.
There we go.
So he gets 1,000. Then the other guys get 44. This guy, I'm going to 100x his account. He gets the 2760801. I'm going to 100x your account. Your account's going to be 100x. By the way, I did want to talk about Apecoin, and I wanted to talk about Apecoin and the land sale and whether Apecoin can actually hold this level over here. We didn't get to do it in this show, but log on to Banter because I'm going to drop it either here or on our Crypto Banter Shorts channel. So if you're not a subscriber to Crypto Banter Shorts, go to Crypto Banter Shorts. I think it's called Crypto Banter
Shorts.
Yeah, let's do Crypto Banter Shorts. There are a whole lot of this is where we drop micro doses of crypto content for people who are time starved. Carl Dupes also pulls funny faces. He does this in front of the camera, as you can see. Subscribe to this channel because this is where we may be dropping an Apecoin video because the big question in everyone's mind is, can Apecoin actually hold these levels over here? I mean, it's on a tear. I think, well, I'm not going to tell you what I think. You're going to have to listen to the video. So I'll see you guys again in a bit. When I drop that video, I'll do it live so we can have some interaction and you guys can ask questions about Apecoin and we can make it interactive. Until then, have fun, trade well, and remember, sign up with the ByBit link, support the channel at the same time. It gives me a chance to change your life. See you later.